Good morning and welcome to this week's edition of Money Talks on Radio Kidnappers. So once again, just like to thank Ken and his team for all the behind the scenes work. It's quite amazing the work the radio engineers do here. So today we're going to be talking about something that I think it's very important for everyone to focus on, and that is the government's news that they're looking at guaranteeing bank deposits up to $50,000. So you may have heard about this a couple of weeks ago, from the time when this program airs. But that's, I think, in my mind, that is a crucial thing and something that all New Zealanders should really focus on and not just brush aside. With that, stressing the importance of it, I will just revert to Charlie Brown, and with the compliments of Charles Schulz, who came up with this wording. But Lucy tells a hapless Charlie that life is like a deck chair. Some people unfold their deck chairs and look which way they're going, and they sit in that direction. Others put their deck chairs facing the backwards and look where they've been. Others, Charlie, they just put their deck chair right in the middle of all the action and look at what's happening and go with that. Charlie then looks at Lucy and sighs and goes, "I'm just trying to unfold my deck chair." So, with that in mind, you may just think, like, what's going on? What does this mean to me that the government has said that they're looking at guaranteeing depositors with up to $50,000 in banks? What do I do with it? So just as I go on, the purpose here is education and financial literacy. So it's not to bag government or to give banks a hard time. It's just so that you get a better understanding of what is happening, so that you can place yourself in a better position as things unfold, and hopefully before things unfold. So that's the main purpose here. So I just want to refer to an article that was in the Dominion on 25th of June, page 21, just some snippets out of it. It says that starts with, people with money in the bank will soon have most of their money guaranteed. Currently in New Zealand, should a bank fail, then there's no guarantee that the government will bail them out. So under the Reserve Bank's Open Bank Resolution Scheme, depositors at a failing bank may have to take a haircut, with some of their money being taken to recapitalize the bank so that the bank can open the next day. So, as you probably gathered, a haircut means you possibly lose some of your money, which is not a good thing. So the government's proposing to limit between $30,000 and $50,000 for depositors' protection, and that's said to be about 90% of New Zealanders with deposits in a bank, and it's similar to overseas schemes. So the overseas experience is that when a bank needs a bailout or it fails, it's sometimes the result of some people working in the bank that's made bad business decisions, and it's not really anything that the customer knows about or has any control over. The only time the customer really finds out is when it happens. So the idea of the protection is that people saving for a house deposit or a business that's keeping money aside for for anything that it needs, say a piece of equipment that suddenly breaks down and needs new equipment, then the business will have that cash there for them. So the government's looking at that and thinking, we'll help and try and protect depositors. So that's a good thing. Just with this, the Dominion also refers to a banking expert that says that the international guarantee schemes requires the banks to pay for this deposit, and you'd think that the bigger banks can afford that from their profits, but the experience has been that this cost has been passed on to deposit holders. Certainly for the smaller banks that may not have that amount of liquidity around, that they will pass it on to the deposit holders. So Yeah, at this stage, you may really be thinking, "Oh, this is bad for the banks are just at us again." So I just again like to reiterate, this is just what's there out in the market. So it's not to bag the banks, because banks do provide a good service to the public. You need a mortgage to buy a house, you go to the bank, or you want investment properties, so you use the bank's money to buy those properties and develop your own personal financial portfolio. So they do play a role. But what you have to remember is that with this guarantee, so what does it actually mean? So the government's going to guarantee up to $50,000. Now, the government doesn't really have $50,000 sitting there and a bank fails and they go, okay, yeah, here's $50,000 for 90% of New Zealanders, and they can go and take their money. The government has to get the money from somewhere, and in short, they basically get it in one of three places. They increase taxes, and we all know how that works out, because mainly the middle class suffers more from that with increase in taxes. Or they print more money, so that makes the money that you have worth a lot less. So that doesn't help you either. Or they go and borrow money, so they issue bonds for that. And the thing with borrowing money is that you may go, "Oh, great, okay, so the government's borrowed money, I've got my money now." The people that really pay for that are our children and our grandchildren, and that's because that money that's been borrowed has to be paid back, and paid back with interest, and that's fair enough. But the thing to remember is that the people who suffer are, like I said, our children and our grandchildren. They suffer through education. We could have put more money into education, but no, we've got to pay the interest. Or our loan bank, or hospitals. We need another hospital, say in Hawke's Bay, or rather in Napier. So people from Napier don't have to come down to Hawke's Bay. But we have to now pay this back. So some of you may think, yes, yeah, we've heard this all before with the GFC in 2008. So it's nothing new for those people who may be hearing this for the type of thing for the first time. The thing with the GFC is that, yes, it was in 2008. You heard it all before, and you may be thinking, yeah, it was overseas on the other side of the world. So it doesn't really affect us. The difference now is that this is actually happening on our shores and happening right here with your money, and the fact that these proposals are there, it indicates that government's preparing themselves for something. So that is something to be aware of and to prepare yourself for. Now, so the government. So if we take this again one step further. So the government's guaranteeing your $50,000 up to $50,000. So does that actually mean that you hear, yep, the bank's crashing, so you can go the next day or the same day to the bank and go, yep, I want my $50,000. Thank you very much, and take your money and trance off. Well, if you think about it, that's unlikely to happen. Like that. I mean, it could be great, but there's things that the government has in place through the Reserve Bank policy, and that's where, and partly to do with you taking a haircut and recapitalizing the banks. So the government may guarantee you $50,000, but you may not get it all the next day. What may happen, and with the policy that's in place, is that the bankers may go into liquidation, so it has financial troubles. Then different management, not the same management, will step in place, and that's a good thing for the government. They're saying that yes, we will help the bank out, but not that same management, because they cause the problem. So the government's saying, yeah, we will have other managers that come in and oversee the bank for a time period. They will work out how much money the bank needs to recapitalize itself. Basically, what that really means in real life is that how much money does the bank mean to pay off its creditors? So the shareholders may lose, but the bank's creditors will be paid. So that's what it really means. So when they talk about recapitalizing, don't let the words fool you. It means how much money the bank needs to pay off its creditors. You, as the depositor, will take your haircut, meaning you get less money. Now, your money may be guaranteed, but the bank will also work out how much money you will be able to take out each day. If you think Greece, for example, their people could only withdraw so much euro per day. So the Reserve Bank will work out with the bank how much money you'll be able to take out each day. And then they will also work through a longer process as to how much money they need to pay off their creditors, and then slowly you may get your money back. Now, I say you may because there's no guarantee that you will get your money back. Now, also, I don't want to be alarmist here, and I don't want people to be going, I've got to take my money out of the bank. But what you need to know is these things are in place. And also, as an aside, like I said, I'm not a financial advisor. I mentioned that before. But with current interest rates where they are, and you're sitting with $50,000 in a bank, you may want to have a word with your financial advisor as to your strategy and where you're going with low interest rates. So, that's I think that'd be any prudent person would do that, looking at your finances. So. So that's all I wanted to point out today and stress today, because I do believe that is a big thing that's happening out there in our market, that should a bank fail, the government will guarantee your deposits, but the actual people who are guaranteeing it are the taxpayers, and you have to decide where you want your money to go. So thank you for tuning in this morning. I do appreciate your time, and the people at Radio Kidnappers for putting on the show. So if you need to know more, you can find me on the Radio Kidnappers website. So it's and also on my website. So it's www.taxowl.co.nz. So thank you very much. Bye-bye.